Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to catch up with that price action on the Bitcoin chart. Guys, if you do take a look at my last video, I was suggesting, of course, that we could retap our lows, but in general, I was bullish and that bull pattern was holding, and that did bode well for the market. As you can see, that last episode was somewhere in this area. I think we were about to fire off. That was a good place for a macro entry. We did end up essentially double bottoming, a little bit lower on the candle closures on the daily, but significantly higher on the wick. And so overall, a technical double bottom here. We got a second chance at our macro entries, and then essentially what we have done is put in a nice inverted head and shoulders, or you can also consider this just an accumulation wedge. And given what it is, we have actually broken out of those formations. We did a nice little back test, and currently we're just in the process of hopefully making a higher low after taking out this high over here and making a higher high. So guys, everything is looking fine on the macro. I do want to just point out that in stark contrast to the last, I think it's like 6 months, right? We really had been in a a regression band to the downside, and now what you can see is that finally we're establishing a regression band to the upside, which of course I've drawn out by hand here, and you can see the levels that I'm looking at. Now, where are we going to have a little bit more of a bullish bias on this regression is as long as we keep above that mid zone, okay? That mid zone is there to protect us, and of course, we could flash wick all the way down to the bottom of this regression. No harm, no foul, as long as we quickly get back above that mid area. So what are the numbers that we're talking about? We don't want to see a breakdown under 58K. That's going to look very distributive to me, and that could be actually the end of the market. However, if we do just get a flick there, and as long as in general we're holding above this 63 to 67K area, then again, even if we take out this little October low here, that's perfectly fine. It's just going to be another higher low in a series of higher lows, and hopefully that would imply that the next high is even higher than this one. Okay, so we are looking still for a potential breakout, and I'm sorry for not having that many updates in the last 2 months, but of course I was starting a business with my partner, and of course you can check that out at AR Collective. You can go ahead and search for that on WAP, or you can take a look at the description of the video below. AR Collective on WAP, okay? And that's just how you register for our group there, where we do have weekly discussions. We have, a set of traders in the trading hub. We have research on all the altcoins that you could imagine. You can request charts. You can request research. And of course, we just have a nice, healthy community. Now, guys, nothing is perfect. It is a work in progress. I have been working hard on it for the last couple months in order to prepare us for altcoin season. And I think finally we've got the T's crossed, the I's dotted, and we are going to be well positioned into the new year. Now, when does that altcoin season start? Usually after the elections, okay? Business loves certainty, right? Business loves certainty is the expression, the age-old expression, and uncertainty just makes markets kind of jittery. Now, who's going to win? Who's going to be better for the markets? Honestly, that's not something that a president just by themselves can control. It really depends on the character of the Congress. And so, overall, I would just consider that a wash for this cycle. Now, whoever's elected, they may have a big impact on the next cycle, okay? The next cycle, because they are going to leave their thumbprint and a legacy on the market. But Given that usually it takes a couple years for laws to get passed, it takes a couple years for these government agencies to start changing seats and for policies to start changing. I really don't think that anything is going to come out of that in time for this altcoin season. So if you were hoping for some type of a Harris depression or some type of Trump just explosion, I really don't think that markets are thinking that way. They're only thinking one cycle at a time. They're going to take their profits at the top of this cycle. This cycle is already baked in based upon the policies of Trump during the COVID era and also during the Biden era, and it's already baked in. The market already knows what they want to do. The market makers already know what they want to do. You can pretty much ignore the politics, and you have to understand this cycle is just going to play out like it probably would have anyway, regardless of who gets hired. Now, could there be a little up and down, during that, election week, or if there's a little bit uncertainty on, after the election? Okay, fine, but that's going to get hammered out, and then the market's going to continue to do whatever they want to do. And you can say, well, in the future, it's going to be really bad because, Harris is a socialist or Trump is a fascist, right? And so, that's going to cause problems for the next cycle, right? It's not our problem right now, unless you live in the United States and you're interested in politics and policy, which I strongly encourage you to develop that. But for the sake of this market, just please understand there's going to be a lot of hotheads out there trying to push you around and making you nervous, and I just don't think that that's what's on the table. So what is on the table? Well, let's go ahead and turn off my regression band there. And let's just take a look at the pi cycle because the pi cycle has not led us wrong in the past, at least a couple cycles. And you can see whenever we do get a cross on the pi cycle, that is a top of the market. And currently, that cross would not occur unless the top level of the pi cycle comes significantly down, which is possible. Or if we rise significantly, maybe even to 120K, okay? So I would say, right, very generously that 120K is on the table. Where would I be a little bit more modest? Well, you can kind of see that we had this double top, we had a blow off top before. What if we have just kind of like a stinking top and, this thing starts curving down, this curves up, they meet kind of in the middle. Then maybe we're talking about that 80K range, right? 80 to 90K. And that would be very realistic. You can see where the market was essentially over, basically 50% between the red and the green lines here that I have on the pi cycle, and that would put us right in that kind of 80 to 90K area. So if you want to start taking your profits, if you're in something that's 20x or 40x or something, right, and you haven't taken any profits yet, well, if you start seeing on my channel an update on the pi cycle, and we're kind of getting, like a third of the way up there, 50% of the way up there, then you might want to just start putting a little bit of a profit in your pocket, because what you can see is that when we do reach those type of extremes, anywhere from that 50 all the way to the top, then it is just an absolute collapse to the bottom of the market. And that will be indicated by getting stuck underneath that pi cycle bottom line, which currently is around the same levels that my regression band was suggesting, approximately $62,000. Okay, so we can just say as long as we're above $62,000, this thing is still potentially driving to the upside. And if we're below $62,000, then sayonara, this market cycle's over. See you in 4 years, right? So, guys, just to be very understanding that yes, we can wick down there, we can scare the living bejesus out of people, but what we don't want to be doing is putting multiple daily candles under those levels. We don't want to be putting weekly candles under there, and God forbid we put a monthly candle underneath there. It's going to be definitely over, in my humble opinion, guys. Guys, I do have just another way To look at this chart, let's go ahead and take a look at my Heikin Ashi candles. You can see here on the daily that we are just continuing to push up. So, you know, in our current orientation, we're not really losing momentum on the daily. I know we're having a bit of a pullback on the actual candles, right? But just from a Heikin-Ashi perspective, not doing so bad. We still have this very nice impulsive momentum to the upside, looking a bit like a rising wedge that could have a pullback. So if we do get that pullback, don't be too shocked. I don't think it's going to be the end of the world. Again, you have my bottom line there. If we do look at a higher time frame here on the weekly, you can see that this is just incredibly impulsive on the weekly in terms of our momentum to the upside. So, a little bit of a pullback. That's really well deserved, okay? Well deserved. And so let's go back to the daily here. Let's just take a break from this alternate perspective, right? We can go ahead and take a look. Do we have any fair value gaps? Yeah, we have a nice fair value gap here around 64,000. We have a little baby one here around 67,000. So could we come back into that area? Yeah, absolutely. Could we just try to shake out the market by taking out 58K and then flicking back above here? Yeah, absolutely. I really wouldn't be too bothered by that as long as the daily candle closures are again above that kind of $62,000 area. Where do I feel very secure? Above that $65,000. Okay, if we hold this local bottom, then this thing is probably just continuing to impulse. Let's go ahead and take a look. Do we have any chart patterns here? Yeah, we could potentially put in a big double top. This is what some of the Twitter heads are talking about, right? Oh, there could be a double top here, and maybe we're gonna break down to 20,000 again, and there's your chance to buy. A couple people have hypothesized this to very serious people, but guess what? That isn't validated. Definitely, as long as we're above that $62,000 area, it's totally not even, the conditions are not even right for it. And then we don't even get validation until we're under 48K. So if we start putting daily candle closures under 48K, then I'll entertain this pattern. But more likely, what we're looking at here, if we just go to a more reserved and kind of like a humble time frame of the good old 4 hours, we are still pushing to the upside off of this little bullish pennant that we have here. Pennants are not the best formations to be trading off of. However, we do get a little bit of backup from this accumulation wedge. And so essentially, as long as we hold the neckline, again, that $65,000 area, maybe a little bit of a wiggle room, right? Down to this maybe, that 62, that pi cycle, anywhere in this area, it's going to look basically like a retest of this accumulation wedge. And then we still have this target up to around 80 to the low $80,000 area, and this may be just what's going to continue to play out. Now you will note that will put in a higher high, and so we might suggest that even on these very high time frames, right, this is our macro high right now, that we would probably be putting in a higher low, and the bull market will continue. And again, that double top just is not validated, guys. Okay, there are patterns that you can find on any time frame, and you have to understand where do they validate. Well, this one's been validated. It flipped the neckline, okay? It's continuing to push up, and it looks like this is actually just a retest of the breakout from the pennant. Now, pennants, again, are just weak formations, okay? Basically a coin flip. But when they go in your favor, they can absolutely go in your favor in the to the measured move. And, of course, these accumulation wedges, that's a Wyckoffean pattern, so I do trust it. How can a Wyckoffean pattern just kind of shake you out? Well, sometimes we do get a dip down below here. So let's say, hey, that's right in my 58K area. Okay, so let's just say that we did break down to that 58K. Again, no harm, no foul, as long as you pop back up above that, that line of support, right, and then get back above the validation level, right, that neckline. So, 65K really does look like the name of the game here. That does look like where our pi cycle wants to rise to. And so holding 65K is going to be really important to keep this pi cycle bottom line moving forward. And I would be very excited about that if we do get underneath that 62, that 58. Again, we're going to invalidate all this bullishness. Okay, like those are the bull patterns. Okay, that's not hopium right now. This is actually validated stuff. Okay, it's doomium, right? The guy's talking about a double top. They're putting doomium out there because their patterns, their hypotheses of the market are not validated. Okay, just please understand that. Let's go ahead and turn off some of this junk, and let's go ahead and put on my good old Bollinger Band midline there. Let's see. Let's go with a just a close. Okay. And you can see that just here on the 4 hour, really, we're just potentially trying to find our low. Unless for some reason we were able to pop up above 70K, then I would say, probably we're going to just kind of revert around there on the daily. Yeah, I mean, we're in good shape all the way down to 68K, and then, maybe we're going to start squeezing to the downside, okay? Something like this, right? That's going to look a little bit dangerous for maybe that deeper impulse, that kind of shakeout, fake out, maybe during the election week. Let's go ahead and take a look at some of the indicators that I was building. Guys, I had COVID really badly for about a month and a half. So again, like why was I away? Not only was I starting a business, but I was also sick for a month and a half, and so it was just a lot for me to be dealing with. I am in much better shape now. I was just coughing nonstop, had pneumonia, just could barely speak properly. And I did my best for the group during all of that and worked hard every single day, but I just could not do the extracurricular of this YouTube. But I'm back, baby. And so here we go. During that time, I did develop some of my own indicators. If you are a member in the group, you'll get this one for free. It does give you a nice pivot here. Okay, so underneath 70,840, right? On the daily, you may continue to fall. Obviously, if you get above that number, maybe you have a chance to start popping, right? So if you are in a short, maybe you want to be aware of that number, or if you're looking for an entry, maybe you want to be aware of that entry that the low maybe has been put in. And so that is based on a caretaker's MACD, and I find it to be a very sophisticated calculation that he's using. I don't usually depend on the MACD myself. I use Stokes, but in this case, he's one of the best, and so I'm just doing my best to learn from him. Now, that's the only thing that I took from him there. Otherwise, I am just trying to take a look at where we might have high volatility. Here you can see that we do have high volatility coming up here on the daily. And so as long as we maintain that upward bias, that could imply expansion to the upside here. And we don't really want to miss that move if it is going to be our breakout move. Now here we had, pardon me, this is extreme low volatility, which then goes into expansion. We had that same type of low volatility over here, and simply we lost that Bollinger Band midline. We got into a squeeze to the downside, and so we had expansion to the downside. Could we see that expansion to the downside? Yes, absolutely, but we can also see expansion to the upside as long as we maintain an upward bias. Now you're understanding why this pivot is so important, guys, because if you're above that level, maybe your bias is to the upside. If you're below that level, maybe your bias is to the downside, and you maybe are able to hedge yourself appropriately. Here we did have a red cross, which did suggest that we could dig deeper. Whenever you cross the 200, it does set up powerful squeezes to the upside. So here we had a green cross, and you can see that was a nice powerful move to the upside. Here we had extreme high volatility, which suggested that we were going to go into a massive amount of consolidation, and we just massively consolidated to the sideways, right? And that's usually how consolidation goes in a bull market, just sideways and down. Maybe if it's a really impulsive, you're going to go sideways and a little bit up, but usually it's sideways and down just because the market gets tired. You have people dropping out, they're taking profit left and right, and that's exactly what we got. But as we started to reach these critical low volatility points, once we had a maximum shakeout, now we're starting to see some type of indications that we may have that bias in an upward direction, and you kind of don't want to be sitting that out, right? At least you want to take a chance with reasonable risk management. Of course, this is not financial advice for you personally, because I don't know you. I don't know your situation. I don't know your risk management, right? But this is just how I'm thinking about myself. And so when I say you, of course, I mean myself. But, you can do whatever you want. I'm just here to just lend some friendly insights for education and entertainment. On my indicator here that I developed, you can see that I do have colored candles. You can turn that off, but it does suggest a possible entry right here, and then a possible exit point, right? We had a little bit of a fake out, shakeout here. No harm, no foul, basically broke even. But again, another one, a nice impulse here. You can see we're still in the green after a little bit of a shakeout, fake out here. And so, maybe we start turning red. I don't know. But in the current orientation, it is suggesting maybe just hang in there if you did get that nice entry off of my indicator. You see that little friendly little green dot right there, right? So I have the arrows, and then I also have a set of little dots. If you can't see it on your screen because your screen is just too small, just trust me, you can see it on the indicator. Here I have a dot, and then also the arrow for that potential entry, right? The dot is kind of like a front runner, and then the arrow is a validation of a potential squeeze to the upside here. And you can see that the actual cross was on this mega candle. You would have been late if you got in on the cross, right? So you have to have a way, you have to have a strategy for entering before that happens, and that's what you can get with this indicator if you do sign up for the 3-month subscription. Guys, I think this episode has been long enough, so I'm going to sign out. That's your alpha for the day. Stay safe and happy trading.